In this video series, I'll be demonstrating the Zig Zag Indicator. We're going to go from concept to strategy to analyze the market and use this to help you build a better trading strategy. This is Mark from TradeInform.com, and in this video series I'm going to show you some tools that will make your trading easier, and even more importantly will let you relax and be able to enjoy your trading. The first thing that I'm going to do is have a look at the Zig Zag Indicator. Now this indicator is very simple. It changes direction after the price has retraced a certain percentage. Now if you look at the chart on the screen, you can see that once we have reached a certain high and the price has then retraced back by 10%, the indicator changes direction. And likewise, once the price has reached a low and retraced up by 10%, the indicator changes direction again. The Zig Zag Indicator is an excellent tool for testing a market because it is a simple concept. We can easily apply it. We can change the percentage to suit the market and the time frame that we are testing. So in this case, I'm going to apply it to the SPY ETF, which tracks the S&P 500 index. And you can see on the screen what the SPY index looks like from 2000 to 2019. And I have included dividends reinvested. On screen at the moment is a TradeInform backtest model. Now this is a tool to analyze all sorts of trading strategies, different time frames, different indicators and different markets. You can use a trade-informed model to develop, refine and optimize a trading strategy to make sure that you hit your trading goals. And I'm going to demonstrate just by clicking onto the backtest tab here, and you can see the data is over here on the left. We've got the calculations here for the Zig Zag Indicator, and over here is the actual backtesting part of the model. Here on the results tab, we can start to see the effect of the Zig Zag Indicator. Now here is the buy and hold SPY market that I showed earlier, and here we can see buying the Zig Zag Indicator every time that it turns from negative to positive. So every time it hits an uptrend, we're going to take the trade. You can see over here that although we've got the facilities to test a stop loss and a profit target, we're not doing this. I just want to see how the pure indicator reacts to this market. So I can quite easily adjust the parameters for the indicator. So I can increase this to a 15% swing or a 20% swing. And you can see I've set these two to be equal, but there's no reason that I have to do that, and we could set these separately. So if I just want to set this to a decline of 25%, so every time the market declines by a quarter from a previous high, then we're going to enter a sell trade. And every time the market rises by 30% from a previous low, then we're going to go and enter a buy trade. What I particularly like about the Zig Zag concept is the maximum drawdown has stayed relatively low when compared with the underlying market. And we can see this more clearly if we go onto the annual analysis tab. And we can see that the largest winning year for buy and hold is significantly greater, but also the largest losing year is significantly greater. And this is crucial. If you want to be able to trade a strategy over the long term, you have to trust it. And it becomes very difficult to trust a trading strategy that is losing close to 40% in a single calendar year. And unfortunately, this is what happens to a lot of people who believe in buy and hold, but then see their equity decline significantly, particularly in a short period of time. So what we've looked at here is a very simple proof of concept. We've seen that the zigzag can be applied to the SPY Spider ETF and that we can get some reasonable results, and the maximum drawdown is relatively low. In the next video, I'm going to take this further. I'm going to be looking at how we can refine and tweak this model to see whether we can make some of these changes. Also, how well this applies to different markets. What about the Qs market? What about markets that are less well correlated with the SPY? Following that, we're going to take it even further and we're going to look about how we can put this concept into a real working trading strategy. So I hope you've enjoyed this video. If you have done, please hit the like button, please comment below, and please subscribe to this channel if you want lots more concept like this about helping you hitting your trading goals and making your trading easier. And for more information about trading the financial markets, please go to www.tradeinformed.com.